While the government shutdown may be ending, experts predict the economic impact of those missed paychecks and layoffs may have a trickle-down effect in the days ahead. Mark Hamrick, Senior Economic Analyst at Bankrate, joins us now. Mark, great to have you with us. So let's start with the impact of the shutdown on the economy. What are some of your takeaways, Mark?
It's been estimated, Jenna, good to be with you, that fourth quarter growth may have a subtraction of about 1.5% during those 3 month period, during that 3 month period. And by contrast, the growth for a full year is typically averaging around 2%. So that is a significant hit, but you're expected to make up a good part of that in the first quarter of next year. But let's boil this down to the way it affects everyday Americans. This was an unforced error on the part of elected officials in Washington, causing a great deal of stress for all kinds of people, ranging from food stamp recipients to people who are working in behalf of the American people in the federal government, everything from law enforcement to air traffic controllers. And there were significant problems with the nation's air traffic over the last several weeks, where the airline industry lost millions of dollars because people were either unwilling to fly or they had to keep some planes on the ground. What I would say is that the good news is we'll soon be getting economic reports that we didn't get before. The bad news is we may be getting some economic reports very soon, and they are not expected to look very good. So we'll be happy to have the clarity resulting from the federal statistical data, dubbed by Fed Chairman Jerome Powell as the gold standard in the data realm, but the actual look of that data may be somewhat downbeat as we head into the early part of next year.
Yeah, you alluded to it. The shutdown has caused a delay in some key economic data on things like inflation, which some experts are predicting could impact the Fed's decision to make more interest rate cuts. Mark, what's your prediction there?
Right now, it's a 50-50 bet whether the Fed cuts interest rates with its December 10th announcement, and getting more economic data will be helpful. But the Fed has already cut rates in the last two meetings, 0.25% at both of those. And so it's getting close to the point where it thinks that it essentially has removed restriction from the economy. The question going forward is, will they need to give some medicine to the economy if the job market remains rather lackluster? And that would mean lower interest rates in 2026.
So, of course, thousands of federal workers will be returning to work soon, but we know many have had to take out loans or have fallen behind on bills. And it's not just the federal workers, it's everything that trickles down from that. They're not spending money at the shops and the salons and restaurants. Mark, what's your advice to these people affected by the shutdown in this way, who are trying to recover financially after a month without pay or a significant cut in pay?
Well, the damage has been done, and there's only so much they can do from here. I can tell you from being a resident of the DC area myself that some of these people have been driving for Uber, trying to pick up jobs on the side where they can. Jenna, even for a broader audience, essentially everybody watching right now, this really harkens back to something we've been talking about for years at Bankrate, and that is the need to prioritize emergency savings. Because whether it's an interruption in income or employment, whether it's a sudden expense, whether it's life coming at you, the reality is that we do have to pay more during certain periods than we do during others, and the inoculation for that is to have sufficient emergency savings.
Yeah, just a few seconds left, but President Trump, the White House is floating the idea of a 50-year mortgage. I wonder just your thoughts on that in just a few seconds, Mark.
Really speaks to the desperation people have with respect to wanting to resolve the affordability crisis with respect to housing. This isn't the solution. People would essentially be long-term renters if you think about having to pay a mortgage over the course of 50 years to actually own a home.
Yeah, you'd probably die before you end up, paying off that actual loan. All right,
Exactly.
Mark Hamrick with Bankrate, always good to see you. Thank you.